Hello, ladies and gentlemen. I have got some exciting news for you today. Today, we're going to be discussing how you can make some really big money during what could become one of the biggest wealth transfers we've had for over a decade. Now, let's get into it. You see, the S&P 500, as you may have noticed, has crashed by about 10% in just around a week. Those are nearly unprecedented numbers, especially in our recent times. We haven't hit numbers like that since events like COVID or even 9/11. So, this is a pivotal chance for us to start investing. This is because everything is going to be far, 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 far cheaper than you would regularly be buying it at. So, if we can invest into the S&P 500, this is an incredible time for you to do so. Easiest way to do that is to look up low-cost index funds that withhold the S&P 500 stocks. That is the simplest, easiest, and not guaranteed, but most likely to succeed way to invest your money. Especially, as I said, whilst everything's at a major discount. However, of course, you are still, with those investments, banking on the future of America stabilising itself, which in these certain times can be quite a difficult bet to make. And that is why the stock market has crashed to the level that it has. However, if we really pan back and look at the wider picture, do we believe that America is going to crumble? Will it do badly for the next few years? I believe so. I believe there will indeed be protests, there will indeed be some riots, and there will indeed be quite a lot of property damage and damage to people, unfortunately, as it stands. However, will America fall? I have a hard time seeing that, at least at this current stage. Because though their military is not as powerful as they would like everyone to believe, it is still easily one of, if not the most powerful military on the planet. And whilst we can make judgment calls about politics and certain politicians, I'd be very shocked if America was to put itself into a position of all-out war. If it was, however, of course, the stock market of the S&P 500 would tank a lot. And so it is something you're going to have to balance within your own risk portfolio. There is always the safer alternative of betting into index funds, either of total global all cap or using an index fund that is global all cap excluding the US. That is another way to effectively balance your risk portfolio. As we've seen in the last few years, the European stocks don't grow anywhere near as rapidly as American stocks. However, in this current climate, I would say it is a much safer bet. Whilst we can argue on the points of where America's going, I don't see a future where Europe is in any way damaged beyond repair. So, if you do want to spread your risk, there is always the option of those types of index funds. And bonds are always the old classic. America has still never failed to pay on its bonds, so those should be relatively safe, even given the current circumstances. However, if you do believe that some kind of big major world event was to break out across the world, then the stocks would not be safe, because it may be the first time in history that America does not pay back on its bonds. But if they did that, it would cripple their own economy. So again, it's still relatively safe. There are other alternatives, since high yield savings accounts are still genuinely high yield. You can take advantage of that, and that is a much, much safer way of doing it, as all of that money is insured. Well, check the amount depending on how much you have, of course. In the UK, your bank holdings are insured up to £85,000, whereas in America it's $250,000, and that can be spread across multiple banks as long as you make sure they're in different banking groups, so are owned by different holders. For example, some banks will collectively be owned by one major company. If that major company fails, then you're only insured 85,000. However, if you have banks across multiple groups, even if each group somehow magically all fail at the same time, your money will still be insured across all those accounts. So that could total 85 if it was one account, or if it's two, it could be 170. And you can see how you can spread your money, spread your risk, and have it all of it, insured, which is a nice way to keep it safe. If you're truly worried about the long-term strategy right now. Equally, there is always the question of your pension fund, which a lot of you probably have in just a standard pension plan, perhaps with a major pension provider. And there's nothing wrong with this. However, do be aware that most of them are probably relatively heavily leveraged in the US markets. That's not something to fear. It's just something to be aware of, and you may need to figure out if you want to continue using the pension provider you're currently using. You can always transfer your pension to other providers, other plans, other schemes by setting up a personal pension fund, making sure you put all your workplace pensions and all the pension money you've ever accrued into those SIPPs, they're known as in the UK. Put all the money into there, and then from there you can choose which funds to invest in personally. And equally, all of the pension companies will have different funds with different goals, different investment quotas, and different expected returns. All of this is something you can personally decide on. So if you decide that taking a risk on America is not currently worth it, find a provider that doesn't currently put lots of their weighting into American stocks. That will currently be harder to find, as that's been the standard for many years. However, given the current circumstances, there will be certain funds propping up, or certain companies that decide to direct their funds in a different direction, and you can really take advantage of that. So, when it comes to physically investing, rather than pension funds or other withholding companies, for your personal investments, it is up to you to make the decision, as always. But you would just have to ask yourself, do you see America falling apart in the next 5 to 10 years? If the answer is yes, then perhaps look at other investment options, alternative investment vehicles, and other things to invest in. Or if you think it's no, then the old S&P 500 and hold still stands. If you think you're not sure maybe, then it's time to diversify. So you can still have, say, half your investment in the S&P 500, just building and accumulating, and take out half and put it into a fund without the US, or into individual stocks if that's your type of game. You can put it into, like I said, high yield savings. There's many alternatives during this time. Me personally, I think it's going to be an interesting few years that can be very profitable if you pay attention, if you know what you're doing, and if you take the adequate time to research. So if there was any time to get into investing and researching, it's now, because a lot of the stocks have dropped massively, or to put it another way, every single company is currently having a flash sale. And if you buy them whilst they're cheap, even though they should have a much higher value, then you can simply sit back, wait for it to reach that much higher value, and collect a tasty profit. So this is why we need to look at the importance of investing during this time. And realistically, no one knows the future. Any influencer who tells you exactly what to invest in or what's going to happen in a few years, don't listen to them, even if they're a qualified financial advisor, because trust me, those people don't know what's going on either. So, it's up to you to leverage your risk, figure out your own risk profile and how you see the future going, and make sure to be as diversified as you can when things start to get uncertain, like now. See, consolidation does indeed build wealth, but diversification protects it. And a lot of people will not be willing to make big bets and risk a lot on such an unstable market. And that's fine. In that case, diversify a bit. Equally, if you do think America is going to continue to grow, then this could be the chance to make a lot of money, and we could see one of the biggest wealth transfers we've seen for a very long time. So, do you want to miss out on that wealth transfer, or do you want to be making some money? It's up to you. Anyway, that's all from me. Thank you so much for watching, and have a good day.